one other potentially silver lining, historical trends. If there are any indication, the market could see big gains in the month of April. Joining us now with his thoughts on where the market is headed is Xuan, who is Fundstrat's head of data science research. Ken, thanks for being here. So April seasonally tends to be good for markets, but you don't necessarily tend to have this kind of an earnings setup going into April either. So where do you think it all shakes out?
Hi, good morning. Yes, we definitely constructive on the market, and the framework we used for the seasonality was we call it the rule of first 5 days, and we basically look at if the market is down in prior year and if the market up more than 1.4% in the first 5 trading sessions of the year. And historically, we identified 7 prior instances, which the market on average up more than 25% of the entire year. And this, of course, the past performance doesn't guarantee the future results, but this framework actually plays out very well this year. The model suggests the good performance in January and the pullback in Feb and another bigger rebound in March. That's actually what happened this year. And if this framework plays out again in April, then we could see market up 3 to 4% this month. And as you guys mentioned, of course, the earning is important, but I think the market is more forward-looking. In other words, a good example would be over the past 6 months we have seen consistent downward revision on the earning estimates, but the market has been able to manage to up more than 15%. Okay. Another example would be that last year the earning actually was up, but the market has been down. That's why we in our framework we think the 2024 EPS is actually more important, and a lot of those kind of bad earning already priced in the current price.
What is the data telling you right now about technology specifically as we get into earnings season here? Do you believe that the bounce that we've seen in tech and that trade particularly that's caught some attention is going to stay hot, or is there kind of a dampening of some of the expectations that's still yet to come?
Yeah, we still think we should stick with the Fed. Fed is such a large portion of the overall index. If the index is going to be up, then tech has to be up. And tech, given the current the macro backdrop, the high, the low unemployment rate, then the Fed is also actually one of the solutions to that. Therefore, Fed still our top pick of the year.
Do you think that some of the tightening of financial conditions that we have seen, though, are going to be problematic for tech? And, even though the Fed might be closer to the end of its rate increase cycle than the beginning, it doesn't seem to be done. Does that mean still a rocky road for tech in the shorter term?
I don't think so, actually. I think it's still as you guys mentioned, like the recent data showing like the inflation is actually falling faster than what the Fed expected, that many people expected, and also the improvement in the labor market, and that's actually showing the Fed has less work to do. And if the Fed pivot or even like stop cutting rate, that's actually benefit the tech. The P could further expand, even if given the current market condition, even if the EPS, even there is a decrease in the E, but a small increase of P could offset that reduction in earnings, and it could still support a tech rally.
And so with the Fed right now specifically, if they even were to pause or even pivot towards cuts in the future too, what would that signal about the economy and what they're specifically seeing in terms of some of the trends and what that actually means for a landing scenario where we've continued to kind of use this analogy of a soft landing versus a hard landing, or even the no landing has been out there, but it sounds like that might be off the table?
Yeah, we're not the FOMC. I don't know what's going to happen in the May FOMC, but I think the most recent data, especially the Friday's job report, the employment report, showing like it's actually a welcome results by the Fed. And it's definitely strengthened the case for a soft landing or even no landing. The unemployment is still low, while the average hourly earning has been on the downtrend for a few months. And we also seen the participation rate is ticking up. based on your perspective, you can call it a good or bad results, but I think this is definitely welcome results by the Fed. And while Fed might not necessarily like immediately respond to that, they might say, "Oh, we need more data point to prove blah blah blah." But we don't think it. To me, it doesn't make sense for the Fed to risk the economy in order to bring down the inflation or to improve the labor market faster. Because as you mentioned about the regional bank crisis, it's showing the monetary policy by the Fed already start to bite into the banking system. It really doesn't make sense for the Fed to break the economy in order to break the inflation or the labor market.
Well, and as we discuss all this, a reminder that we get more inflation data this week, right? We get CPI on Wednesday, and so that's going to be really important. As we go into earnings season, do you think the market is going to be paying more attention to sort of inflation data and the economic backdrop, or are they going to be weighting these earnings reports more heavily as we shift towards that season?
I think they both are very important. As I mentioned, I think the actual result might matter less. I think what matters more is the outlook from the management. Especially like for the second half of the year and even for next year. And of course, the CPI, PPI release this month will be also very important because that's the main, I think that will be the main indicator that the Fed will decide what's Fed potential path, especially in the May FOMC. One thing I want to point out is on Wednesday, the Fed will also release the March FOMC meeting minutes. That's actually very interesting to watch, like especially that FOMC meeting is right after the collapse of the SVB. So we could know more insight about how the Fed react to like what they thought about the banking, the overall financial condition back then. And that could help us to predict or kind of foresee what's going to happen in the May.
Ken Xuan, who is Fundstrat's head of data science research. Thanks so much, Ken, for kicking off the week with us. We really appreciate the time and insights.
Thanks for having me.